What's up, guys? This is Joe, otherwise known as Catching Beauty on Twitter, and this is S&P Watch number 1, where I do technical and fundamental analysis on S&P's price action, as well as set price targets and expectations for the future. So this is the first video I've done in this video series, because I do S&P updates in our Alias trading server, and if you want to join that, there's a link below. The Twitter's below, so you can see success, and you see that the website will be linked below as well. We actually do produce a lot of good content. And keep you updated with multiple markets. We cover Forex, stocks, crypto, anything you guys need. If you send a request for it, we'll try and integrate it into the server and we'll cover it. But anyway, so this is, as members requested, this is just me going over the S&P. I'll try to do these videos in the same sort of abundance. I do the Bitcoin Watch videos, once a week, or when big market moves happen that I think a lot of people want to hear about, hear my opinions about, and just general overview on the market. So we're going to start here on the daily chart, because you get some important levels here. I might have to change the S&P index we're using. Actually, no, this should be okay. This should be okay. Just going to draw in some larger time frame trends to look at. In fact, that was not the level I was going to look at. I think we'll stick to yeah, that's what I wanted to draw in. My bad, guys, my bad. So what I want to look at here is buyer exhaustion, or at least buy side exhaustion, and where to expect it. So I went over these in a few actual S&P Watch posts in the Alias Trading channel. So we're just going to look at the crash from 2007, it's 2009 when the low was made. And we're going to take the fib extensions from this low here. Okay, guys, and look at this. Okay, so the 1618 here, the first time we touch it, we get all this selling. Okay, and that's because this is smart investors taking profit, because it would have been perfectly possible for the market to retrace here. And it's not a coincidence that we naturally see profit taking here and the market starting to, having weakness and show weakness, because institutional investors that bought or buying up stocks here have finally hit a price level where they want to be taking profits, and lowering the risk on their portfolios. Because past this level, this isn't overextended, but this is the probability that there's a market reversal from the 618 to the 2618 is quite high. So large companies, they want to take profits, go on holidays. This is just natural human market, the market cycle, just taking profits and moving on. And so it's no coincidence, as we getting even closer to being overextended, at the 2618 levels to the 3618, which is the zone we're about to reach. It's no coincidence that we're seeing these large, downturn, really, really choppy price action, that we just haven't been used to for the past 11 years that we've been in this bull market. So we are getting exhausted. The market is getting exhausted. A lot of European countries are falling into recession. UK stocks are doing terribly. If I put this, the FTSE chart next to this, I mean, it's terrible, really terrible. The US, and that's why the US, as the strongest market, is the one that we're looking at to sort of be an indicator of the worldwide state of the stock markets. And it's not good to use only stock markets and the S&P to make your opinion on worldwide markets, but it's definitely good to look at the strongest markets, and when you see weakness in them, that is when you'll tend to see weakness across the board. So I never say base your economic opinions on just the S&P. I think that's a silly way to do it, but it's definitely a good indicator of the all the recession and bad investments taking their toll on the world and slowly sort of trickling down into the US economy and US investors. So looking at these levels, we're so near the 2618, and I just wouldn't be surprised to see some, a big sort of move here. Um, but we have had this big sell-off here, and I don't think this will be the top for the market at all. I really think we're going to be trading well into this zone here. But do expect something to happen, because it is an important level. But now that that's drawn up, I'm just going to chuck in the 2016 mini crash, just to give us sort of a level of the buyer exhaustion on that side as well. So the buyers that stepped in at 2016, there's not going to be as many buyers, so this level is going to be less important than this 2008 crash is, because we're really looking, this is quite local buying power. And we're seeing the 3618 sort of step in here, sort of exhaustion where this 2618 is, and the 4.236. These levels are so unimportant and really not what you should be looking at, because this local buy pressure is sort of already out of the market at these sort of levels anyway. So I really think most of the buyers that stepped in here are kind of out of the market already, and a lot of the buy pressure that stepped in here is sort of out of the market already. This is like trapped buyers buying into the stock market, thinking that we're just going to continue to trend up, which in my honest opinion, we won't. This is the federal government, the Federal Reserve, printing USD, paying off debts, injecting it into banks, making credit more available, and propping up the market just for eventual failure. It's human nature. It's the market cycle. It's how they think it works, but it really isn't how it works. And if you read any up on this Austrian economics and any of that sort of, which I encourage everyone to do, you'll understand that that is just not how markets work. Anyway, less on that. I don't want to get too dark, but I'm just going to put these Elliott waves in as well, because this is important. This is also a really great way. Elliott waves are a great way to see what stage in the market we're at. On a macro level, Elliott waves are quite important, and give us a good idea of where we are in the market. On a local level, it's a bit harder for them to mean anything, because you can have interwave extensions. You can have wave extensions. So, for example, if this was the first wave, let me just draw these in. If this is the first wave, you see the sell-off here, and people think, oh, is this the the first sell-off? Is this the top of the first wave and this is the bottom of the second wave? But actually, you'd be fooled by that, because it's just a wave extension within this first wave. And the top would actually be here, and second wave here, third wave here, fourth wave here. And I'm just going to, I think my target for S&P top out is about 3,300, I believe. Yeah, that looks about right. Just get an idea. Yeah. So we just draw this zone here. So my S&P top out target really is, it's around here. I'm just going to draw in. So this will come in. I'm going to, just give it, that's about 3,400. And, this is really my S&P top out target. This is where I'd be looking to step into shorts, depending on the price action that starts sort of occurring around here. But I really think it'd be a dip and go. But anyway, so, on the final wave of this buy side pressure, this is kind of like how you look at it in a bear market, okay? So, or at least in a bull market. In a bull market, if you put these fib extensions on, you want to be targeting this 2618, because you're in a bull market. That's what you want to be targeting. And in a bear market, you'd also be targeting the 2618 on the sell side. So as we're on the final wave of this exhaustion, and we've entered all this new buying pressure in here, you want to be looking at this 1618, because you're in the final wave of the exhaustion. You don't really want to be targeting 2618, because that's extreme levels of exhaustion. We're already in the fifth wave. To break past and push to be overextended on the final wave. It's perfectly possible we could get to 4,000 and trade here, but in my opinion, I just don't think we're going to see that. I really think we're already overextended as far as markets go. The typical bull market is 7 to 8 years. We're now verging on 11 years. And we just have so many factors, economic factors of actual countries going into recessions. That for me, I just think we are on this final wave of buy pressure, propped up by the Federal Reserve, propped up by government officials reducing regulations. I'm not going to talk about Trump, but he's a terrible example. He's a great example actually, propping up markets. But anyway, let's not touch on that. So on this final wave, you really want to be targeting 1618, not 2618. And we have so much confidence levels here as well from this extension. The exhaustion from this buy pressure that's accumulated in 2016. So that's my top out target. There was a couple more levels that I had here. There was a inter-year trend line coming up here from the highs that sort of comes in here, but we're just going to take a step in and look at the moving averages as well, or at least the highs here. But I do think we were due a sell-off around here from multiple levels, for multiple reasons even. We've got this trend channel here from the lows and highs made of this sell-off. We've got this trend channel. So I'm really looking for us to break above this and make this level quite obsolete, in my honest opinion. But I do think we'll see some sort of reaction here. I'm just not quite sure how powerful it will be. So if we just get these so we've got this 1.382 here lining up with this trend channel coming up here. For my rules, I just wouldn't be getting into this short here. I'm less, especially in a bull market, I just don't think trend lines like this, are respected at all or should be targeted for levels at all, really. I think, if anything, looking at the way the market structure is, we've had this retracement, ABC retracement. I'm kind of looking for this sort of price action, for us to sort of trade above it and then go into this final wave up here. That's really what I want to see. It might not be what we see. I'm really waiting for it to pan out, but I just don't think this, after all that's happened, I just don't feel like this is just going to suddenly produce a lot of sell pressure. But, it's perfectly possible. And we might even see something like this form, come up here, form a nice head and shoulders, and, come down. But I'm really waiting to see how we react to it. I don't think it will prove much resistance, but it's definitely worth keeping in mind and keeping your eyes on. I think the sell pressure that people are expecting here has already happened here. So we've already had the market sell. So I just don't see it really doing much here. I see it not doing stuff here, and moving up to the 348. And that's what I've told everyone in my group. I just don't see it really being a strong point of resistance. But if we take some fib extensions around here as well and kind of see what the local levels are saying. So if you see what buy pressure, this pretty puts the buy pressure accumulated here and the buy pressure accumulated here. There is some fib, confidence levels just over the peak of it. So it's possible that we might just see a little sell-off, trade back down to this peak here, reaccumulate and move back up. But I really just don't see it offering much resistance, at least. And so the macro fib extension here was about, and the trend channel was about 330, 331, I think it was, 3031, I think it is. But I just don't see it really being a level of resistance. I see it as kind of breaking past it, but we'll have to see how that plays out. I don't recommend really anyone's in a short position. I'm more recommending that whatever retracement we get here is you go long on it, really. I don't really recommend you enter the market short, because it's kind of just a risky short, because we're trading so close to this sell-off here that I just don't think, we're only trading, I know it's quite big in index markets, but 2% above the peak here. I just don't see suddenly there being enough sell pressure here for us to push us down. I just don't see it. But we'll have to see how it plays out, and I'll come back to this the next S&P watch and just see what's going on. But I've been right so far, so who's to say I'm not going to be right again? But Thanks, guys, for joining me on this S&P watch. I hope it was informative, and we'll have to see what happens in the next one. This is my first video, so I'll make sure I try and get some more important levels in on the next video. Thank you guys for watching. Hope you enjoyed it. Peace.